Testing high volume bars on the ES using a 15-minute time frame. Let's get straight into it and add structure. As we can see, we have local support here where we break with increasing volume and wide spreads. No surprise, this is the US Open, so volume does increase and obviously the spreads will increase, but break this level of support nonetheless. From the lows, buying. So therefore we would expect a rally. And where would we rally to? Well, what was support should now be resistance. So this is like a rally back to ICE setup. So on the approach, we want to pay very close attention to all the price action and what's occurring at structure. So as we rally, what do we notice? Well, bar A closes off the highs. There's evidence of selling. To be expected. Why? Well, because we're at resistance. However, we would still class this bar A as no demand. It's an up bar with lower volume than the previous two bars. Yeah, ideally, yes, we would like to have a narrower spread. However, we can see that selling is evident. We are at resistance. We're in an area of supply and volume has declined on the approach. And technically, this is a no demand bar. Okay. Difficult to trade though. Why? Well, because we are coming up with we are coming up with wide spreads closing firm. And to be honest, we wouldn't trade this. But we do note that bar A resistance holds with evidence of selling. Closes mid bar and importantly low volume into this supply bar. So we are testing here at resistance into supply and selling has emerged, and the buying force is rather weak. Okay, don't forget this is a 15-minute time frame, and then resistance holds here for the next couple of hours and sellers make themselves present on bar C. Wide spread, down bar, slight pop in volume. Then bar B prints. Look at this lovely bar here. It's the lowest volume up bar for the day at resistance after this bar A, which is also no demand, and sellers have made themselves present at bar C. Ideally, again, the spread could be smaller on bar B, but we have to take into consideration the background conditions and context of price action at resistance. Therefore, we can short here very comfortably. Now, what do I mean by context at resistance? Well, there is more to this chart. What do we note here? Every approach to resistance, volume has declined. Therefore, demand is diminishing. These are all up bars testing this level, and on each approach, volume is declining. There is no demand at resistance. It's drying up. Ergo, from bar B, which is also a no demand bar, when we take into consideration the background conditions, wide spreads, closing, we come back, we rally, volume increases. We note no demand bar 1, which is also, if you've noticed, similar volume to the previous bar, yet spread has narrowed. So there is also a case of effort versus result and no demand. And we see evidence of selling at the highs. And then the next push up, volume decreases, and then the next push up, volume decreases at 3, with sellers making themselves present on this bar with this volume. So this is how we get good at trading, by piecing all these elements together. So now, if we go back to this bar here, bar B, it becomes a no-brainer. We can see there's many different elements coming together. As we rally back, volume decreases, so we know that's a positive for weakness. On each attempt to break on up bars, like the ones we just highlighted, it's volume is demand decreasing in force, which is a positive. And then when sellers do make themselves present, we get a pop in volume, which is a weakness. And where are we? At resistance, which is a positive for weakness. And to the left we have a high volume supply bar that breaks support, which is valid. Why? Over 50% of the bar has closed under. So again, another positive. So this is a very easy trade to take. And not only that, our stop is simply here, which is 5-6 ticks away. And our first port of call or obstacle to overcome would be here. If you think in the realms of effort, if you think in the realms of risk reward, so that is 6.5, what say 7 point, that's 28 ticks to gain as a minimum, and our risk is 5-6 ticks. Now that risk to reward is very, very good. 5 times, 6 times. Okay? So this becomes a very high odds trade. And we need to pay attention to this subtlety of price action of the up bars at resistance may appear anal, it may appear to be pernickety, but this is the additional bit of analysis that helps us to pull the trigger. Very difficult to pull the trigger at one. But then when we combine all these elements together, when it gets to this bar here, we note sellers comes in, each attempt to break has lower and lower volume with all this in the background, it becomes very easy. So this chart is a good example of testing a high volume bar. And it's fortunate that we do have structure to work with. We can lean against here for a trade. If the market is very weak, say we might come down here, then we might rally back to here, and then this action may unfold. Which is okay. Why? Well, because say this is our area we broke. So we're holding a higher level of resistance, which again is additional weakness. But it is more difficult to trade as the market should naturally test this area. Okay, so just bear that in mind, that if we do hold a higher level of resistance, it acts as additional, or we can count it as additional weakness. Okay, it's important to always analyze the volume as we approach a certain high volume bar area, because if we're going to break, we want volume to increase. So that as we're rallying here, we want to see volume increase, but here we're decreasing. By this very action, we disconfirm demand in an area of supply at resistance. Odds favour lower prices. And thinking in these terms is very, very important. And look, we do get a very good move. Lovely move to the downside. Good. On to the next study.